Hello and welcome to this video where we will be covering cost behaviors and looking at the gross margin and contribution margin income statement. Cost behavior is classifying a cost based on how it responds to a change in activity level. So you may have heard the terms fixed, variable, step costs. Those costs change, or they may not change, depending on its cost driver. Now, we looked at the term cost driver in one of the previous videos, and that is something that causes a cost. So when that activity happens to change, what does the cost do? Does it increase, does it decrease, does it stay the same? Well, whatever that answer is will determine the type of cost that it is. For example, a fixed cost remains the same regardless of the level of activity, as long as you're within a relevant range. So when you see the term relevant range, we're talking about an activity level between this number and another number, some type of fixed number, because in reality, costs are not linear. Accountants, we like to look at things in terms of straight lines, and things aren't always straight lines. So when we graph costs, a lot of times those lines are curvilinear. They look like little curves and bumps and hills. But we focus on the flat part of the curve. And based on the flat part of the curve, that is our relevant range. And then we can classify costs within that flat part of the curve, whether it's fixed or variable, semi-variable, so on and so forth. So let's see some more examples of these different types of behaviors. But I use a fixed cost example first, but think about rent. When you sign a lease agreement and you're renting your apartment, let's say you're renting an apartment for $800 a month. No matter how, even if it's a yearly, let's say it's an annual lease, whether you spend the night in that apartment or not, you still have to pay $800 a month every single month. So if we say the activity level is days, as long as you've signed the lease, whether you spend the night for 30 days or 10 days, you still have to pay that amount. So a fixed cost in total remains the same regardless of the level of activity. Now, the fixed cost per unit will change. So if we think about cost per day, the cost per day will vary inversely in terms of the level of activity. So when the activity goes up, the cost per day will go down. But in total, it does remain the same. A variable cost will increase with the level of activity, or it decreases with the level of activity. The change is in direct proportion. So years and years ago, we used to pay for text messages by the text message. So the more text messages you sent, the more your phone bill was, your cell phone bill. And it used to be 5 cents a text message, which is why people didn't text a lot in the past. And not to mention that it was a little more difficult to text back then. You didn't have a keyboard that appeared. But either way, that was a variable cost. Now, the cost per unit remained the same regardless of the level of activity, as long as we were within that relevant range. So whether we sent 2 texts or 25 texts, it was still 5 cents a unit. Now, within the relevant range, again, the fixed cost is fixed within the relevant range. If I go to this 6,000 activity level, the cost may jump up. That's why I'm only focusing on the relevant range. And this becomes even more important when we look at cost estimation in the future. So all that I'm saying about the definition, fixed cost, variable cost, it's only true when I'm within the relevant range. A semi-variable cost is I like to call it a mixed cost. That's a cost that has both a fixed component and a variable component. So notice that for this line, this is my total cost line here. So we're assuming that dollars are coming down on this axis, and then I have my activity level on the x-axis. So at the point where I have no activity, I still have this $10,000 cost, assuming this is in thousands. That is my fixed cost there. With no activity, I still have that cost. And then I have my variable cost sitting on top. So as the activity level increases, notice that the total cost line increases as well. So this is a mixed cost. If you look at something like your utility bill, electricity, a lot of times they'll charge you a flat rate for hookups. They'll do that a lot with the water bill. You have the flat rate that you pay, and then they charge you based on usage. So the cost will increase in total as you use more water. So that's an example of a mixed cost. A step cost sort of looks like a fixed cost, but we're not just looking at a relevant range here because the activity level is a little bit tighter than the relevant range. So what happens is the cost remains the same as long as I am at a certain activity level. Then when the activity level increases, the cost will jump up by a large amount in an incremental type of way. So it sort of looks like a step. I like to use the example of a call center. So if you're looking at a call center and you have one employee working, and at a certain level, the employee can take a certain amount of calls, maybe 200 calls on a particular day or during a particular week. Now, if the level jumps up to 210 calls, you gotta hire somebody else. Well, you're not gonna hire somebody who's only gonna take 10 calls. Or if you do, you're gonna pay them a partial salary, but we're usually gonna hire a full person. So then that cost jumps way up. In this case, we're saying it's gonna jump up 5,000 and we're gonna hire that person part-time. So as long as I have anywhere from 0 to 400 calls and my 2 people can cover those 400 calls. If I jump up to 420 calls, gotta hire another person. So notice the incremental changes, and that cost remains flat within that activity level, but then when that activity level jumps up, the cost jumps up significantly as well. Now let's look at this from the standpoint of a product cost. Remember, product cost includes materials, labor, overhead. And looking at this from the standpoint of a product cost, we can use this classifying cost by behavior to help us determine the different ways we can cost out our products. Now we'll use some of these different ways to help us determine the price we're going to charge the customer. We'll use some of them for decision making, and we'll use some of them just to be in accordance with GAAP. So the different ways we can compute a product's cost could be based on full cost. So we're looking at every single cost that's associated with making the product, selling the product, running our business. All of that stuff gets included, and we'll call that the product cost. Now we know that's not GAAP, because GAAP says product costs are materials, labor, and overhead. But if I'm making pricing decisions, then I may want to include all of the costs of my business to help me determine how much I'm going to charge my customer to make sure I have a profit. Now, full absorption costs. This is GAAP. So when we're looking at product costs, it includes all of the variable product costs and all of the fixed product costs. We're looking at all product costs. We're absorbing all of our product costs, and that helps us to determine how much it costs us to make 1 unit of product. We exclude any marketing and administrative costs. For variable costing, we're only looking at variable costs as a part of product costs. And we do this for decision-making purposes because the variable costs are the costs that we can control. We can control how many units we make. We can control how much advertising we do if that advertising is a variable cost in that particular situation. So we look at all of our variable costs, whether they're marketing or product costs, and that helps us compute the unit cost of the product. So let's see this in terms of numbers. So take a look at all these numbers here in the orange blocks. These are product costs. These are marketing and administrative costs. If I am using the full costing method, then I add in materials, labor, overhead, whether it's fixed or variable, and then marketing and administrative, whether it's fixed or variable. And that's going to be my full product cost. Full costing, not GAAP, but it can help me in pricing decisions. Now, if I want to do my external financial statement, we use what's known as full absorption costing. So you've done this without even knowing that it was called full absorption costing. This is when I compute product costs based on manufacturing costs only. I don't care whether it's fixed or variable, don't care. But I do care that it is a product cost. So I'm adding in materials, labor, and overhead. Even though overhead is broken out in terms of variable and fixed, I just combine them all. So combining those items, that's going to give me a different cost per unit in terms of my full cost per unit. But this is what I'll show on my external income statement. Now, what if I need to make decisions about how many units I need to sell in order to make a certain amount of profit, or in order to cover all of my costs? Then I'm going to use variable costing. With variable costing, I pick up my variable manufacturing costs and my variable marketing and administrative costs. All the fixed costs I ignore, and I combine those, and then that is my unit product cost, the $27. So I'll use that for decision-making purposes. Now let's see how this can translate into our financial statements. As I mentioned, full absorption costing. This is the one where I take all of my product costs. This is what is required by GAAP. This is also the gross margin income statement. This is the same income statement that you prepared in Accounting 1 when you did the multi-step income statement, or Accounting 2. When you did the multi-step income statement and you took your sales minus cost of goods sold, and it gives you your gross profit. Cost of goods sold includes all of your product costs, so your materials, your labor, your overhead. Don't care whether it's fixed or variable. For variable costing, we can create what's known as a contribution margin income statement. On this income statement, instead of subtracting out simply cost of goods sold, we subtract our variable cost, and it includes our variable cost of goods sold and our variable marketing and administrative costs. And then we get our contribution margin. Contribution margin represents the amount I have left over after covering all my variable costs to cover my fixed costs and to make a profit. We use contribution margin in break-even analysis. That's something that we'll see in the future, but it is something that you learned in Accounting 2. But again, this is for decision-making purposes. Now, this is just the top half of these financial statements. I still have, once I find gross margin and contribution margin, I still need to subtract out all of my other costs to find my profit. Now, assuming that the number of units produced and sold are the same during the period, I should get the same numbers for net income, whether I'm using full absorption accounting or the gross margin income statement, or variable costing for the contribution margin income statement. Now, here is the full statement. So I want you to pay close attention to the full statement, because if you are asked to prepare a contribution margin income statement, you don't want to just stop at the gross margin. Excuse me. If you're asked to prepare a gross margin income statement, you don't want to just stop at the gross margin. That's not a complete statement. You also have to subtract out the marketing and administrative costs. This income statement is also called an income statement that classifies costs by function, because my product costs are at the top and my period costs are at the bottom. So we subtract out all of our product costs, and we get gross margin. Then we subtract out all of our marketing and administrative costs, and we get net income or operating profit. Now, also holds true for the contribution margin income statement. You don't want to just stop at the contribution margin. You have to subtract out all of your other costs, which are your fixed costs, to find profit. This is classifying costs by behavior, where we have fixed versus variable. So we have all of our variable costs at the top, and then all of our fixed costs at the bottom. Really great in helping us make decisions. Now, check out my additional video where you get to see me prepare a gross margin income statement and a contribution margin income statement using numbers. So in this video, we looked at cost behavior and we learned how to classify costs by fixed or variable or mixed. Then we took those concepts a step further in some of the concepts that we learned in terms of product versus period, and we created income statements, whether it's a gross margin income statement or a contribution margin income statement. I so appreciate your time and attention, and I hope you have a wonderful day.